You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again from the Southern Studio, coming at you hot and heavy, fast and furious here for another explosive edition of your bi-weekly options extravaganza, known far and wide as the Option Block. Hope all of you out there in our listening audience who are being impacted by this, or about to be impacted, I should say, by this crazy, they're calling it once-in-a-generation event from a weather perspective. I think it's touching everybody. All 50 states, they're saying at this point, or close to it. Maybe not, maybe Alaska's skating. But outside of that, just crazy times here. So hopefully you're battening down the hatches. I've heard stories of potential whiteout and blizzard going on over there in Chicago soon. Luckily, I am here in the Southern Studio. So normally this might be an issue, but we are outside of the nexus, at least for right now here, of the long arm of Mother Nature. So fingers crossed that that continues here. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we tend to think so, around these parts, Options Insider Radio Network. Reminding you, hey, hopefully you're liking what you're hearing, because I've seen a lot of new people discovering the content all the time. If you want to keep that partay continuing, listeners, keep rating and reviewing on your platform of choice. It clearly does help new people continue to discover the content. And of course, if you want more content in your lives, and hey, who doesn't? Maybe a week like this, you're snowed in, you need more to do, you need more to listen to, and these markets are crazy. You want someone to help explain and maybe talk you off the ledge a little bit in these crazy markets. Well, you know where to go. TheOptionsInsider.com/pro. What's waiting for you there? Well, just last week we had a pro explosion on the network, listeners. We did not just one, but two pro Q&As out there. We had Mr. John Smolin breaking down all sorts of crazy fun from his years as a market maker, some conspiracy stuff sneaking in there, all kinds of fun, as well as the uncleist of Mikes, Mr. Uncle Mike TOSAW, also answering all your questions, as well as options oddities at the end of the week, as well as live access to everything we did throughout the week. Closing in on 200 plus episodes there for your listening pleasure, just on the exclusive pro podcast feed. That's to say nothing about all the new stuff coming down the pike, as well as, of course, the giveaways, the sweet, sweet giveaways that are coming up every month out there on the pro side. TheOptionsInsider.com/pro is the place to go to join the ever-evolving, ever-fun partay over there. Let's see who's joining me on this dark side partay we got kicking off out there on the show today. First, let's go out. When we're talking dark side, there's only one name that springs to mind. That is the uncleist of Mike, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show on this dark side kind of day, sir.
You know what? I think I just need to look at my screen upside down, and it's kind of the same effect of bullish days.
Yeah, you just got to make sure your monitor is on a nice rotating bezel there, and you can just keep flipping it for days like today. It'll be perfect out there. And also joining us, the actual person who is our go-to person for dark side days, because every day is a dark side on the dark and stormy shores of Maine. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, how go things out there in the land of the dark and stormy, sir?
Well, all I have to do is you got to play Gonna Be Flying to the Danger Zone. It's Danger Zone time, my man. I did not think I would see it till the end of this. I thought we were done in 2022, but you know what? It's 2022, so there's always more.
Yes,
there's always another surprise.
It's always another surprise waiting. If I was in the Chicago studio, I could probably fire that up for you. A little bit more challenging here on the go studio, the Southern studio. Maybe for tomorrow for Vol Views. If you join me for Vol Views, I can get you a taste of the Danger Zone. But right now, listeners, it's time for a taste of the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, welcome to the Trading Block, the portion of the show where we do just that. We break down, man, what the heck is trading? What is lighting up the tape out there today? And as we were joking about earlier, listeners, a whole bunch of red on the screen. You know, I go away for a few days, a few sessions in a row, and the whole market just goes to hell, listeners. That just goes to show how important the option block and all of our live programming is to maintaining some semblance of order out there in the markets. But we'll try to struggle through it. Nonetheless, yes, of course, we had a big sell-off earlier in the week. Yesterday, it seemed like maybe the bulls could get some of their mojo back. We started driving the things up. Most of the major indices were up over somewhere in the neighborhood of 1.5% for a large portion of the day yesterday. So maybe it was BTFD season. Who knows? And then today it was just it was the mother of all bull traps yesterday, because they're coming for you today. The bears have their claws out. They have cut the guts out from the bulls. And they are feasting on the entrails, just to keep that graphic metaphor alive out there. The S&P right now off 2.75%. The Dow off about 2.25%. The NASDAQ saying, hold my bear kids, off 3.5% right now. There is a whole heck of a lot of blood on the screen right now, listeners. So just a lot of craziness to get to. And it's interesting because in the first part of the sell-off, when we were hanging out down around 2%, even not that long, about an hour before showtime, vol was kind of unched. VIX was maybe up about 1/10 of a point, 0.2 of a point, even given all the red we had seen out there, because the markets are just kind of inured to this at this point. They've seen it 8 bazillion times since 2020. One more time, not going to shock them. But it does seem like this second leg down, past 2%, getting down to this 2.75% for the S&P and beyond range. This is starting to send some reverberations back through the market again. Going back to what the Rock Lobster was just alluding to, the danger zone. We are starting to kiss it again. VIX was pretty much unched right before showtime, which again is another reason why you can't prep for these shows more than about 10 minutes at a time, listeners, because other than that, you're just barking up the wrong tree, because the markets change that quickly out there, listeners. Coming into showtime now, we do have VIX up about 2 points, about a 2360. Again, you're talking about a 2-point swing in just a span of a few minutes out there. It was literally unched not that long before showtime. So that just, again, shows you how much things are rocking and rolling out there right now. Our old friend VVIX after yesterday, we had seen things kind of falling off out there, listeners. The vol, not so much out there. Was that back to about an 81? Puts it down 9 points from Monday's show. If you're watching these markets, you know that really is not where it should be hanging out. And as we re-rack it now, as we kick off the show, it's up to about an 86 again. So that puts it still down, but only down about 4 points from where it was on Monday's show. So vol, given how much we're moving around, listeners, vol needs to be a little bit frothy. VXX, our friend that we had washed our hands of, is now saying, hey, look at me again, 1510 when we kicked off the show, up about 0.5 point from where it was this time last week. UVXY, will we get a reverse split? Not today, listeners. 760, up about 1/3, a little more than 1/3 of a point out there right now. SVIX, our inverse friend, coming back the other way. By the way, again, most of these numbers, listeners, about an hour ago, they were all unched. So this is all movement just in the last few minutes out here. SVIX, 13.75, down about 0.5 point. UVIX, also trying to race UVXY to zero at a 670, up about 0.4 of a point. And our old friend Vol Q was at about a 27, not that long before showtime. That puts it up about 1.7 points. And guess what, listeners? It's ticked up again to about a 28.60 right as we kick off the show. That puts it up 3.3 points from where it was this time last week. And again, that should come as no surprise. NASDAQ's off 3.5%. So things are wild. Speaking of wild, Uncle Mike has some wild business to attend to today, so he's going to hit us for the trading block. Then he's got to roll on out, I think, to go shovel his driveway and prepare for the snow apocalypse that's coming. So, Uncle Mike, what is lighting up your tape out there in the hinterlands of St. Charles today?
Well, besides the snow that's about to come, or may not come, there seems to be a lot of indecisiveness on this in the weather community, but we'll see. Besides that, like I said earlier, I think I just need to turn my monitor upside down when looking at these charts, or stand on my head or something, because holy cow, this is a brutal day today. One thing that, I know you always look to me for the ray of sunshine in days like today, but here it is. Real money a lot of times does not trade this time of year, meaning that institutions and people with large bank accounts are not out there to buy dips and things like that on days like today. They're vacationing this time of year. They're home with their families, whatever the case may be. And so when you have days like this, you're going to have more volatility typically. And so oftentimes, this could be an opportunity. I mean, I know one thing that I'm looking at with my clients right now is that if the Grinch steals Christmas, so to speak, with markets, and we have a down couple weeks, for a longer term, in the longer term section of the portfolio, I am a very excited buyer. Just looking at some names, and these aren't recommendations, but these are just some observations. Even if you kind of like Amazon, it's almost back to its COVID lows right now. Even if you kind of like it, how can you not love it? Google's another example of a stock that's pulled back quite a bit. Apple's another stock. These are technology names. Microsoft's another one. When you have stocks like that, this isn't a startup. These aren't whoever heard of stocks. These are stocks that rule the world, and they're depressed a lot in value. And even if you just kind of like them, I think these are long-term buying opportunities. Now, in the short term, anybody's guess at this stage. With my rules for my aggressive short-term strategy, I have very minimal exposure on right now, and come January, I'll make a decision as to where we go with that. But once January comes into play, I reset my number, so I'm actually very excited about these levels going into January. Next couple of weeks might not be so fun if you're trying to be active and bullish at the same time, but going into January, there's a lot of reasons to be optimistic. You just have to be optimistic in the right spots. The other thing that I'm really liking right now are bonds. It's one thing, the gripe that we've had about bonds for years and years and years. Why do I want to take on the exposure of the bond market for a 0.2% yield, for a 1% yield, or whatever? Well, that's not there anymore. And so the reason with which bonds will go down, if they go down, if we continue to raise rates. Now, if we continue to raise rates, number one, I think we're towards the end of the rate raising cycle. We'll see. I could be wrong. We could have just major awful inflation. You never know. But I do think we're towards the end of it. But if we do continue to raise, at least you're going to be in something with a 3 to 5% yield on it. So that's the things that I like, and that's what I'm seeing today. Aside from just the carnage and blood on the streets, as Mark likes to put it, today, I think if you can just keep your sanity and handle times like today, there are some serious opportunities there. They're just in different spots.
Carnage and blood. I would never use such colorful language, Uncle Mike. How dare you cast aspersions in my direction?
You're a walking thesaurus. You use those terms all the time.
Just for that, I'm going to hang up on you now. But before I do that, sir, if you want to leave our audience with any parting thoughts, any words of wisdom, anything to live by, anything you're watching until our Monday show, any quick, I know you're not going to do a strategy block today, but any quick hints along those lines. And also, if folks want to find out more about the Uncle Mike content empire, where should they go? What should they do?
For the content empire, feel free to follow me on Twitter at Mike TOSAW, TOSAW. If you are looking to have a conversation with me, check out my website, stcharleswealth.com. And as for what I'm watching, I'm watching what I said I'd watch a little bit ago, but I think the next level for the S&P, lows of the year are 3,500. And if we have just a couple more days like today, we're going to be there. So hoping we don't see it, but if we do, you never know. Merry Christmas, everybody.
There he goes, Uncle Mike TOSAW from stcharleswealth.com. All right, Mr. Rock Lobster, we got rid of that guy. So now the real show can start. Now the fun can begin. Mr. Rock Lobster, this is just a horrific, what did Uncle Mike say? Just a day of bloodletting and carnage. What's lighting up your tape out there in this horrific bloodletting red day, sir?
Well, all I know is you got to fly into the danger zone. Danger zone.
You started off so weird. I keep thinking you're singing "Fly Me to the Moon." It's like, why are you singing an old lounge song right now?
Because I can't sing.
That's true.
I probably was doing Danger Zone to Fly Me to the Moon.
I think that's what you were doing, which was kind of throwing me, and I'm guessing a large segment of our audience off as well. You got to do that.
I think
do. There we go. You got to get into the tune, you know.
I think I've just driven many of your listeners to put their heads under rocks, to put their phones away, to stop listening to the show.
Luckily, I can mute you. They don't have that privilege.
Exactly. Well, that is one of the benefits of being the a benevolent dictator, by the way. I just like about 10 minutes ago, my kid just went down and did a polar bear dip in the freezing water. He came back in one piece, though, so that part's good. So clearly, somebody with no fear.
Was it it a challenge? Did you bet him something? Why did he do this?
No, just a little, a little wake up. It's 28 degrees out. The water's, the ocean's chilly. Just, but the ocean's warmer than the air. So,
as you do when you're a teenager living on the shores of Maine, you just throw yourself into sub-zero waters because why not?
Exactly. The hardest part is just making sure you don't slip on the ice. And smack your head going in, because there's no docks. Everybody has their docks pulled up, so you gotta go old fashioned. You gotta go the old fashioned.
Are the clam pirates? Are they that hardcore? Are they still out in the sub-zero weather?
We did have a clam pirate on Monday. I had to be better at sending you, because I do snap the pictures, but I don't think I sent you a picture of the clam pirate. But yes, we did. There was at the beginning of the week. Now it's getting a little chillier. I think a couple things. One is, the inflation picture, and the thing is, like, the rate of inflation is still bad, but it's not as bad as it was, right? And I think, if you start looking at, inflation rates toward the end, right, of the last 6 months are starting to come in a little bit. I still kind of got this. I think the sort of with the Federal Reserve over the last 10 years, I have to say, I think they've been a little drunk with power. They're kind of like the bull in the china shop. They get into the china shop, they make a mess, and they will eventually get out. But my gosh, the damage they're going to do in the meantime. If they just didn't do anything, just leave it alone, put it down, just don't bite the apple. It feels like they're doing more harm than good at this point. However, I am all for them raising interest rates, because clearly the $1.7 trillion omnibus 4,500-page spending bill, which I guarantee no average person is going to benefit from in this country. The average person, meaning somebody that's not, in Congress or, something like that. The average person, I don't see how they benefit at all. Solving no problems, but spending a fortune that they got to borrow. So the only way that they're going to stop is when rates eventually get to be so expensive they can't do it anymore. That's the grumpy curmudgeon coming out on that one. But that's how I see that. It's totally absurd. Both parties, this is you can't really blame one party or the other, although every incumbent party has certainly helped to kick this over. So I think that is definitely, as soon as they pass that, the market has gone straight down, by the way. If you just, if you look at cause and effect, right? We're kind of like doing that, and we're like, yeah, and then all the kind of sadness happened. Like we had a little bit of a rally yesterday, but overall, since there was kind of this tone deafness, it's just not good, right? It's not good. That's the simple thing I would say. So you do have VIX at a 24 again. We are back in zone 4, and you would think that, hey, these are kind of numbers that would have been hit later, but they're hit now. And is this us going back to a new lower number? I mean, I think didn't we have like a better GDP number today? Well, they revised it upward, and we sell off because of that. Again, not quite sure. I thought it all kind of started off because the MU just had really bad earnings. Like we're supposed to have a chip shortage, and now MU is just in the basement, as with the other semiconductors. So what I would echo TOSAW saying, hey, there's probably some opportunities in stocks. Can stocks be lower in the next 3 months or 6 months after you make some purchases over the next month or so? Very possible. So I would say at least right now, these things are looking kind of grim. As far as the sentiment is very poor, VIX is back up to 24. And at the end of the day, I will definitely be taking some profits and some VIX calls unless we close on a high, meaning like they're going to bid the vol all the way into the close, and then we're like, who knows where we're going to be. So, you look at this and you say, half the government is not paying attention, and the other half, at least, from what I'll call the economic side of the government, right? So the Treasury is clearly not telling Congress anything because I believe this administration just views policy success as throwing money at something and the problem is solved. And that's right now when you look when they post the successful stuff. It's like, well, we spent money on this and we spent money on this and we spent money on this. Okay, and now we have inflation. But like you're not really solving any problems. Like we've discussed this 2022, the problems that started to creep up in February have not gone away. The only thing that has started to dampen somewhat is inflation is not as bad as it was in the beginning of the summer and late spring. And that's because interest rates have just gone straight to the moon. So, and there's a reason why they're doing that, but somehow, again, the two branches of government are not getting their heads aligned. And I think that actually is, that is extremely counterproductive for stock prices, and for sentiment. It's bad. It's just bad. Now, are there bargains out there in the equity market? Yes, but could we see new lows? I'm at this point. I thought the 3,800, 3,900, these levels would hold into the end of the year, and I don't really see the information that's necessarily changed. Right. So Powell says he's going to raise. Market knew that, and now all of a sudden, what? Because GDP is growing, that things are going to sell off because the economy is getting over hot. I don't know. I think there's the two forces. There is people going back to work after COVID, because there was such huge, like everything got screwed up. Supply, like all these things, you could argue, government policy, a lot of it made it worse. I don't think anything was improved. And eventually history will bear that out. But so you got everybody going back to work though and getting back to normal. That was a net positive influence, right? People working, spending money, and just getting back to life. And that was a hugely positive force against all this other stuff, inflation, war in Ukraine, energy prices spiking. So like you have these two things, and I thought overall, the economy would actually start to do a little better because generally it works. And now we're kind of stuck, now this is where government policy can make Like it could make problems. Like if the Fed raises too much, or that could be a problem. If the government doesn't stop spending money, that could be a problem because we're not fixing the inflation problem as fast as we could. So I think, there is a reasonable amount of uncertainty in all that. And I think that's what the equity market's reflecting today. Like we kind of thought we had a path, and now maybe, the path doesn't look as good anymore. So, and the thing that people might have been worried about in the background was, okay, our corporate earnings going to really suffer. And, I think the last earnings cycle in October wasn't terrible. It's just, you don't have that crazy growth. You certainly, all the multiples got chopped in all the big companies. And now MU comes out, and they kind of issue more of a dire forecast. And I think that started things off. And then the GDP thing, the Fed will be raising rates forever. And I think that's kind of where we got stuck. And that's sort of, that's where we are basically. So it would not surprise me to see us go a little lower. Although I don't see what the rationale for the total route and market lows are. Doesn't mean it can't happen, but it would surprise me to see that at this point. But volatility is starting to respond like the market can move. So, anytime you get a real bid for VIX like you're getting today, and it's still, you're seeing a 24 VIX and a near 3% move. So while VIX is bid and it's trying to stay in zone 4, it's certainly, it's not like it's going to 28 or 29 yet. So I don't think we're seeing the shoe drop before we hit to the, until we jump to the odd block. But it's definitely sad. And I think Congress is definitely contributing because they're out to lunch. If they would have passed some, where they, spending was somewhat reduced or something that had any kind of thought to it, I think stocks would have reacted better because at least, they were on the same page. But as of right now, I think traders and investors are like, well, maybe we're not, maybe the government can screw this up and make it worse. And I think that's what we're seeing right now.
And it's funny you mentioned that upside we're getting out there in VIX, because you're right. I was thinking the same thing towards the end of this year. I was like, oh, maybe I can put on a little bit of VIX upside. Then I thought to myself, A, that's insane because the VIX can't catch a bid to save its life and hold it. B, I'm supposed to be on vacation, so what am I doing? And C, what is the argument for a leg up for VIX towards the end of the year? And here we go. Here we get. You're right. The shoe has not dropped yet. We're not hitting a 29 or a 30 or even threatening that. But you're right. In the last hour and change, it does seem like the tenor of the market has shifted a little bit. We are starting to price in a little bit more turbulence, a little bit more froth. I do think this second leg of the sell-off today took a lot of people by surprise, and it is kind of interesting to see the reverberations of that throughout the market right now. Let's see how that's reverberating from a volume perspective, listeners. Let's kick it off out there in the product. We were just talking about our old friend VIX doing some numbers today, 303,000 contracts. Yeah, we're not kissing a million right now or anything like that, but given that the ADV is still kind of anemic, and you know my thoughts on that ADV number if you've been listening for the last week, I think it's a little bit dubious. It's back up now to 542, so something finally managed to budget after last week when every day was well north of the ADV, and yet somehow the ADV continued to fall apart. So weird stuff out there in VIX ADV land. SPY, 6.1 million contracts already today, listeners. So SPY ain't playing today, listeners. Bringing the heat, bringing the thunder. ADV, almost 8 million, 7.96 million out there. The S, 1.7 million contracts, listeners. I'm willing to wager a whole bunch of those 0 DTE contracts are flying right now, making up a good percentage of that 1.7 million. The ADV, 2.53 million. Got a feeling they're going to hit that today. Small caps, actually doing all right, even though they're not blowing the doors off, 424,000. Now, that looks decent when you compare it to the kind of anemic ADV right now of 768. Remember, it wasn't too long ago that was kissing a million as well. So if you look at it through the lens of a couple of weeks ago, not great numbers. If you look at it from this, again, these weird kind of ADV numbers we're looking at right now, it looks a little bit better in that context. The Qs, 2.1 million contracts, the ADV, 2.6 million. So yeah, spoiler alert, the Qs are going to hit their number today, listeners, because the queues are just falling out of bed. Let's get to the top 10 most actives. And again, this is one of those days where the macro is so turbulent. Do people sometimes forget the micro? And the answer is kind of yes, kind of no. Once again, it only cost you an anemic 187,000 contracts to break into the top 10. You might be forgiven for expecting more on a day when everything is melting down around your ears. That gets you to Netflix, listeners. 291 and about a half is where it's trading right now. Down 6.4 handles, or about 2.1% on the day. So quite a drubbing for Netflix. Look at this just 52-week chart, listeners, on Netflix to give you a sense of the drama that has gone on in Netflix over the past year. The 52-week high, 620.61. The 52-week low, 162.71. So as much as we've sold off already in the last few sessions, there's still about 130 handles away from the 52-week low. And God, an eternity, a lifetime away from the 52-week high. My goodness, 620 handle for Netflix out there. Crazy cakes. And that's only number 10, listeners. Number 9, one of the Rock Lobster's favorite. He was just talking about it. It is a good old Softy. Where is Softy hanging out right now, listeners? Let's find out. Let's see if there we go. 234, pretty much even, off about 10 and a third today. So they are coming for it. Remember I was talking last week, listeners, it seemed like there was a bit of a delayed reaction to this antitrust thing. And now it seems like maybe we're starting to get some of that priced in, along with obviously the rest of the market taking Microsoft down as well. Down over 10 handles, almost 10 and a half, about 4.25%, trading right around 234 right now, listeners. The 52-week chart on Microsoft, pretty impressive, but nowhere near as dramatic as Netflix, listeners. The low, 213 and 43, so not that far away from there, about 20-odd handles away from that, listeners. And the high was 344 and a third a year ago, so intriguing times out there for Microsoft. Again, good for number 9, I should say, 199,000. Number 8, the artist formerly known as Facebook. This is Meta. Coming for it today, 5.2 handles to the dark side, off about 4.3%, trading right around 114.60 right now. And again, that is substantially north of where it was just about a month ago when we did that Meta versus Amazon poll, where the overwhelming majority of you folks chose Amazon, and yet Meta has just run away with it. The job cuts really just seem to be music to the streets' ears. They really rallied it. Now it's still coming back off, but obviously a long way to go to get to that 52-week low again of 88.09. But good today for 229,000. Number 7 is what the Rock Lobster was just talking about, listeners out there. We've got our old friend Micron. I was just saying last week on the show, you haven't talked about Micron in a while. Now it seems like everybody can't shut up about Micron. Number 7, 245,000 contracts. Micron off 2.6 handles, trading right around 48.5, off about a little over 5, about 5.1% on the day. This is another one. Interesting chart on the year. A year ago, 98 and about a half. Right now, 48.43. That's the low that came in today. So we're at the 52-week low for Micron out there. Intriguing stuff. Since we're talking Micron, we might as well just transition right to the chip zone, listeners, at number 6. AMD, 62 and a half, off 5.2 handles, or 7.7% today. So, man, they are coming for this sector today. AMD good for 350,000 contracts on the tape. The 1-year chart on this name, 156 and 3/4 about a year ago. 54 and a half was the low, so not too far away from that right now, trading 62 and a half, listeners, for AMD. And then right behind it, once again, the Symbol Twins hanging out together out there, listeners. We've got right behind AMD, we have AMC at number 5, 553,000. So quite a jump between number 6 and number 5. Pretty much 200,000 contracts. Gets us to AMC off 81 cents, or 15.2% today, listeners. Again, good for 553,000 contracts. The 1-year chart on AMC, 34 and a third was the high, listeners. My goodness, does that sound like another lifetime or what? The low, 411, pretty much within spitting distance of that right now, listeners. And then we jump up again to number 4. It's the aforementioned Amazonians out there, listeners. Holding court, 554,000, just 1,000 contracts more than AMC right now, trading 82.30. So as I mentioned, what a tale of two different fortunes since our poll with Amazon and Meta. Meta's just been off to the races, and Amazon continues to languish. Uncle Mike talking about they're hanging out at pretty much pandemic era lows. 82.30, like I said right now, off $4.50, or nearly 5.2% on the day. On the year, a year ago was 173, and right now I get 82 and a quarter is the 52-week low. They hit that today, so establishing a new 52-week low. A lot of you liking Amazon in our poll about a month ago. You must love it now at 82 and change, but intriguing stuff out there. Then we go back, listeners, back to the chip zone. A little bit of distance today between AMD and in its compatriot there in the chip zone, which is NVIDIA. NVIDIA up at number 3, 587,000. It's been a long time since something has knocked Amazon off the number 3 spot. Not by much, but enough. 587,000 gets us to NVIDIA because, like we said, the chips and this whole zone is in a very terrible focus today. Trading a little bit shy of 150 right now, off 15 handles on the day, or 9.1%. Man, they are coming for NVIDIA today. 52-week high, listeners, 313.30. Ouch. 52-week low, 108.13. So we're still pretty far away from the 52-week low, listeners. It's going to take a while. Got 40-odd handles to get back down to there. But still, they are doing a good job of it today. 15 handles coming off the top there for NVIDIA. Then we get to number 2. You can probably guess what number 2 is, listeners. It's kind of glued to the number 2 spot right now. This is the fruit company, and I've said it before. The market doesn't like when Apple is red, and man, Apple is red today. 5 handles pretty much exactly to the dark side, trading 130 and about 2/3, off about 3.5% on the day. Let's see, the low for today pretty much was about 130 and about 1/3, so they're hovering right around their low for the day. On the year, you know the deal. The 52-week low is 129.04. That's going to be interesting to watch. It's going to be a big deal if Apple does indeed break that, because then again, that's kind of been a floor for Apple for a while. It has bounced off the low 130 level a couple of times over the last few months. It seems like the market was not ready to take it down there. Is it ready to take it there today? Day like today, all bets are off out there today. If we break the 129.04 level for Apple, listeners, that's going to be interesting. Look out below there, 980,000 contracts on the tape for Apple. And then what do we even say about Tesla, listeners? This name has just been the volume, the price action, all of it is just on another level right now. Tesla off 12 3/4 handles, or 9.25%, trading 124.83 right now. It got lower. It got down about to 122 and about 1/4 earlier this morning. So Tesla's been selling off on the days when the market rallies. So the day when the market sells off, they're going to come for it again. The market not liking many things about Tesla right now. Issues with China, issues with Musk splitting his focus to Twitter. Many issues are weighing on Tesla right now, and all that lighting it up to the tune of 3.4 million contract listeners. So you're talking more than 3x Apple right now. That is a heck of a lot of paper. Man, you folks are trading up Tesla. And this chart is not going to be music to the ears of the Tesla bulls. 402.67 is the 52-week high. 122.25 was the 52-week low. That came, guess when? This morning, listeners. So we are pretty much hovering right at, every day is a new 52-week low, it seems like, for Tesla. It might be another interesting poll. There's a lot more to be parsed in some of these names that they have just really taken to the woodshed out there, listeners. Intriguing stuff. We mentioned Micron earnings. This has obviously been an interesting period. Obviously, earnings season proper is mostly behind us, but again, earnings never go away entirely, as witnessed today's action with Micron and everything else going on this week. We had Micron this week, we had CarMax, we had Nike. Nike actually very much to blame for the rally yesterday. A lot of folks thought the good news coming out of Nike, maybe Nike getting some of their inventory and inflation issues behind them, maybe that was a good sign for the market. The market taking any ray of hope it can get to rally about 1.5% today, largely on the back of Nike yesterday, and today turning to the dark side with Micron and others. So even though the bulk of earnings season is behind us, it still packs a punch. There still are some interesting nuggets to parse. You, of course, can find all that data, because we love you folks, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
right, everybody, welcome to the portion of the show where we get weird, we get wild. Good thing we kicked that Uncle Mike to the curb. He's not ready for this level of weirdness. Let's get on out. Mr. Rock Lobster, allow me to put a hypothesis before you. Have you ever heard of such a mad thing as someone coming to the market and buying a large number of REIT puts? What would you say if I said something like that to you? Would it blow your mind completely?
I would have to say that's madness. Who would do such a thing? Who would do such a thing?
Apparently, everyone is doing such a thing. This is just the trade du jour. Listeners, if you're one of our many new listeners to the show and to the network, go back and check out some of the archives of this show. If you're on the pro side, go check out Options Oddities. We've gotten into it even more there. It's been just a put-palooza in many names, including one of our returning favorites again today, listeners, Ares Capital Corp, ticker symbol ARCC, trading right around $18 right now, off about 2/3 of a buck, or about 3.5%. On the year, it's been, as the Rock Lobster likes to say, mostly a tale of sadness and woe, even though it's been a pretty tight range. 23 on the upside, 16 and about a half on the dark side. But this has been a story we've been watching all year long. People have been lighting up puts on this thing pretty much all year long. We talked about them on this show. We talked about them a lot on Options Oddities. I mean, we can go back to, on this show, all the way back to July 7th. Where we talked about someone coming in and scooping up the August 18 puts 15,000 times for 44 cents. It was about a 32, almost a 33 vol. The stock at the time, listeners, about $19, $18.93. So they were buying some pretty tight protection there. There were also earnings coming out in a few weeks on July 26th. The earnings actually seemed like they were decent because the stock got a nice little pop up to about 20 and a half. And that was where it closed on expiration. So those puts were still open. So our friends there, this was kind of early on in their saga of throwing money away on puts on this name. They dropped about 2/3 on this trade. Fast forward to the Rock Lobster and I back on Options Oddities just about a month and change ago on November 4th, talking about ARCC yet again. Someone coming in and loading up on 10,000 of the DEES 19 puts. They paid about 70 cents, 69 cents for these bad boys. The stock was not that far away from where it was on the last puts we just talked about, 19.5 bucks. And once again, they're buying tight protection. This was on November 4th, so they buy it about a month and change out. There were no earnings this time. The earnings are on February 8th. And this time, Mr. Rock Lobster, it looks like the trade kind of worked out. The stock closed at $18.36. So right around $18.30, which was their break-even point for this trade. They paid about 70 cents for these puts. These puts were still open. So on this one, they ended up breaking even, apparently, because the puts, they let them go out. So I guess they were happy to dump some stock. All that to fast forward to today, Mr. Rock Lobster, and they are back at it yet again today, this time scooping up 15,000 of the Feb 18 puts, lifting the offer yet again, paying 50 cents. That number should sound familiar, listeners. We talked about a bunch of 15,000 lots on this name in the past. That seems to be the number they like. That's about a 27 vol, if you're wondering. The stock was 1861, so they're passing the first Rock Lobster test, which is the stock's off about 60 cents in their favor, so that looks nice for them. As I mentioned, there are earnings. They are on February 8th, so we'll keep an eye on those. And speaking of keep an eye on stuff, Mr. Rock Lobster, as you'll recall, on Options Oddities, we are also watching a 10,000 lot of the Jan 18 puts out there in ARCC as well. So someone is back to play on the come line here in ARCC puts, putting their money up, Mr. Rock Lobster, saying the 18 strike in January and February, we are blowing through it. A, what do you think about all the paper I just talked about, Mr. Rock Lobster? And B, we think about people coming back to play for even more 18 puts in January a couple of weeks ago and now in February again, sir.
Yes, I believe that this has been continuing, ongoing, steady put buying, but none of it has really made any money yet, to be honest. I haven't seen I guess the early paper aside, there hasn't been really any kind of what I would say like home run, there hasn't been any sort of home run paper, as it were. So while this group is looking better, right? Like passing the sniff test and all that. None of these have. I don't. Unless I'm mistaken, I don't think anybody's really hit the cash register yet on these.
No, not really. We had that one that kind of did all right, but they pretty much by doing all right, I mean they broke even.
Right.
That's about the best we've seen so far. So you're right. They've been throwing a lot of money to the downside, yet to see it pay off. They are back on the 18 line for size, Mr. Rock Lobster. We shall see if that pays off in the coming weeks. And how about, Mr. Rock Lobster? How about keeping that gambling analogy going? How about if I see your ARCC and I raise you a dose of EPR Properties? This is formerly Entertainment Properties Trust. This is a REIT out of Kansas City that invests in amusement parks, movie theaters, ski resorts, and other entertainment properties. How if I threw that at you, Mr. Rock Lobster? What would you say?
I would say, oh my gosh, what delights do you have in store?
What delights? What REIT puts do you have in store? Delights next. That should be the name of our show. REIT put delights. Yes.
REIT put delights. Who thought that would be an appetizer?
Who wouldn't who wouldn't download a show entitled REIT put delights? I mean, that's just music to the ears of the investing masses out there.
Yes.
Let's see. Right now, 3681 listeners off about 9 1/3 just over the last year, about $2.50 today. So they are coming for no delights for EPR today. A year ago, 46.15. Then they sold it off to about $43 in January. Then they rallied it hard to pretty much its 52-week high of about 56 1/3. Then it sold off in June, back down to about $43.50. And they rallied it again up to around $56 again in August. And then that's all she wrote. They just came for it, crushed it down to pretty much its 52-week low of $34.50 on September 29th. Then they tried to rally it again, got up to about almost $41, just about a week and change ago. Then they've just fallen off a cliff again with this latest leg of the sell-off, listeners. So once again, REITs coming under fire. What did we find out here, listeners? We got some more scooping of puts, in particular 8,600 of the Feb 35 puts going up for $1.05. So they lifted the offer on these. That's a 36 vol. The stock was $37.80 when this trade went up. Let's see. So it's $36.80 right now. So they made $1 on the stock already. So that's looking pretty good. There is an earnings announcement in February. It's on the 21st. I do believe that's after expiration. I'll have to check. And then they've come back and done more. A total of about 11,000 on the day. So they clearly like these puts, Mr. Rock Lobster. So there we go. 2 for 2. More size puts this time in everyone's second favorite REIT, EPR, sir. What delights do you have in store for us?
Yes, I was about to say, these are put delights. I keep thinking of, it makes me want to go to a Chinese food place, like in San Francisco. They have these amazing dim sum places. They had and the ladies would come around the carts with all the, and I literally, delectable delights, everything was great.
You say, bring me your delights, dim sum lady.
You cannot go wrong. You cannot go wrong at the dim sum places in San Francisco. They were quite fantastic. However, will these puts equate to a delectable delight for the buyers? Again, not sure, just because, today they're looking good, right? 30, 40 now, 10,000. They bought 10,000. I'm seeing 10,000 total on the tape. They picked a good day to buy them. My big question is, in 2 weeks' time, will they be selling them and making money on them? I mean, because all the open interest has been building in all of these things. It's like one of these things where, I know the market goes down, but I certainly don't want to see the whole REIT market go to zero. So, while I understand them buying these puts because of the, carry and the Fed basically trying to just break everything somehow. And they're trying to get people to be serious about inflation, which I've made it well known that the people who most need to be serious about it are not quite yet. But I think Powell should just go to Congress and just start kicking people in the head. Say, hey, stop spending money. But until that happens, he will resort to raising rates, and people will resort to buying these puts. But, you have to think about it. This is probably the first day we've seen a put purchase in this group, and on day one, the trade's up like 30%. Day one. That's new for us.
Yeah, there haven't been, outside of our joking listeners, there have not been many delights in these trades that we've profiled over the course of this past year. It's been a lot of treading water and then occasionally losing a lot of money on these trades. So obviously they own the underlying, so they're not angry that the underlying doesn't fall out of bed. But still, it's just these options trade, which is obviously the lens that we're coming at it here for the show listeners. The options trades, the options segment alone, not exactly been lighting the world on fire, but we shall see. And Mr. Rocklopster, speaking of names that have not been lighting the world on fire, let's get out of here on a name. We kind of kicked off the year, maybe in end of Q1 once all the invasion madness started unfolding, talking about a lot of people really fading this name and some other names out there. This is Deutsche Bank. We were talking about weekly puts going up in Deutsche Bank for size, and it seemed like someone thought Deutsche Bank was going out of business tomorrow. You know, it was pretty aggressively pessimistic paper. We have seen some of that mitigate out there obviously they're still around over the course of the year. Deutsche Bank trading right around 11.14 right now, off about 20 cents or about 1 3/4%. On the year, a little bit of a different story. Obviously, going back to last year, it had its high, ironically, about 16.70 just a few weeks before the invasion in February. Then it fell off a cliff. It got down to about $9.50. And that wasn't a 52-week low, actually. They actually tried to rally. And in spite of all that put paper we saw back in March, it did rally again up to about $13. Then the rest of the year is kind of a long, slow slog down to its low for the year of about 7.25 on October 11th. Then over the last few months, it's looked a lot better. It's rallied from 7.25, its low for the year, up to where it is right now, right around 11.14 or so. So the last few months have not been the horror show that maybe you would have assumed at the beginning of the year if you looked at all the crazy put paper flying fast and furious on this name. But Mr. Rock Lobster, that put paper is back. This time not quite as near dated. We're going out to February. February 11 puts going up 4,108 times for 65 cents, lifting the offer. That's a 43 vol. And then we saw some more going up, 2,432 going up for 60 cents. So we saw quite a few of these 11 puts. I'll have to go check and see what the total is on the day here, but at least 6,500 so far of these Feb 11 puts. Mr. Rock Lobster, what say you, sir, on more people looking for the demise of Deutsche Bank, sir?
Well, yes, this is one more time where there's been a lot of paper. It's been huge. And it has not quite been correct as of now. So let me see. I'm just looking at Deutsche. Okay, so our equity market looks pretty ugly today. Deutsche Bank is down 19 cents. And yes, they're buying. Yes, they're buying more puts. I totally see that. But they haven't. We've got some of these on in big money flow, and it has been an overwhelming bunch of puts purchased. However, but these are bid. They're bid on the day, but on a day when volatility is going up and the market's looking south. You used to be a market maker. You're not going to stand in there with the dummy hat on and say, I'll keep selling more of these into the hole. So, if you want to buy puts today, you got to pay for them. I'm actually doing the opposite, and I'm getting rid of all of my upside VIX, and not all, and getting rid of some of my SPY put spreads. So this is the day you want to give it back after you borrowed it for a while. As fills are popping in now as I speak. So, at least right now, all these trades look right and they're making money. So, but we'll see if there's some follow through.
As we follow through into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on. Before we do that, really quickly, listeners, let's check in on our question of the week. You guys are coming in fast and furious. Still got about a day to go, so if you're listening on the on-demand side, listeners, head on over to @options. If you don't see it pinned there on our Twitter, it'll be just a few down. Scroll down. You can vote in our poll. We asked you this week, it's the holiday season, and many stocks are looking cheaper heading into the new year, even cheaper right now. if you could receive a gift of a 10% out of the money call. Remember, this is a gift. You're not paying. A lot of people wrote in and said, I wouldn't buy any of these. You don't have to. It's a gift. Someone is giving this to you in your holiday stocking of choice. So you could turn it away if you like, but these are free calls. Who wouldn't want them? If you could receive a gift of a 10% out of the money call expiring December 31st of next year on one of these 4 names, which one would it be? Gave you 4 choices: Amazon, Facebook, Tesla, or Apple. Mr. Rock Lobster, which way are you going? Which way do you think our audience is going?
So I get a choice of a call. What
you get a free 10% out of the money call expiring at the end of next year on one of these 4 names. Which one are you picking, and which one is our audience picking?
Oh, wow. Oh, that's nice. That's a nice choice. 10% out of the money call.
We thought so.
Wow. So let's see, what's Tesla down to 150? So that would only be like $15 higher. Wow. I just think on current trends, I think I would buy the Tesla call. And I think our audience, though, I think they're going to go with tried and true Apple. I would take the Tesla call just as if it's free, I'm going Tesla. But I think the audience would pick Apple.
It's kind of hard to fault that logic. Tesla can do that in a day. They're almost down 10% today. I think they might be. I mean, that 10% could easily, let's see, Tesla, we just had them up before. Yeah, they're down about 9.25% today. So yes, they could do that in a day easily, Mr. Rock Lobster. But you are correct. The audience choosing Apple, about 35%, 34.9%. Number 2 is actually Amazon, 26.7%. Number 3 is Tesla, hot on its heels, 25.6%. No love, Mr. Rock Lobster, for Facebook Meta, only 12.8%. So nobody loving the old FB or the former FB, now Meta out there, Mr. Rock Lobster. So intriguing stuff. Get out there at options to vote if you haven't, listeners, even though I know a lot of you have been piling in. Mr. Rock Lobster, what are you keeping an eye on for the rest of the week until our next option block, sir?
Well, I won't sing it because I already hurt the listeners too much. But I am looking at the danger zone. I'm starting to trim some upside here. Today as the ding, ding, dings were going off. I'm not going to complain about today. I have to be honest. But just if we can maintain zone 4, always hard to do, actually, except in 2022. And remember we talked about, that 6 month realized vol being 24, 25, 26. It's still rearing its ugly head and it's not going away. So I would just say to listeners, you want to be cautious and cognizant of that. And we'll see how and where it all goes from here. But that's really what I'm looking at, because I feel like it's all just weird sentiment and not real stuff at this point.
You can say that about a lot of the market this year, sir. A lot of weird sentiment and not real stuff. Unfortunately, listeners, that is going to do it for us today on the old OB. Uncle Mike, of course, had to leave. Head on over to stcharleswealth.com. Check out what he has cooking over there. And Mr. Rock Lobster, sir, where should folks go if they want to see what you got in the hopper in the land of the pit?
Yeah, go to our Spy Master. I just said, as we speak, just closing another trade. So going to notch 12 out of 13 wins, considering what the market's done over the last few months. I don't think that's too bad. Go to, check out our Spy Master, check out our Nitro Trader with Mark and I. That's if you want to learn to trade like a long short pair strategy. It's been doing very, very well. Obviously, more volatility is better for those strategies. So, it's kind of moving along nice. So go 888-TRADE-01, ask and tell Ted that I sent you, and you get 10% off anything at Option Pit if you want to learn to trade these here options. There you go.
Check them out in the land of the pit, listeners. And as for us, we'll be back in a little bit with Twifo. Dan the Man Gramza joining me to talk about all things futures options. So that should be fascinating. Always a fun time when he joins us. So live folks, stay tuned for all that fun. And for the rest of you, we'll see you back here, Twifo, on the on-demand side. And then tomorrow, of course, Vol Views at noon. And then back again next week, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.